Let's jump into a quick review of the markets with our research from MacroOps, which is our global macro research and consulting firm. So first up, as you can see here, the S&P hit our target of 4,800, and as soon as it did, it started turning around a bit. And if you watched last week's video, that's when we talked about this target as the S&P broke out from this range. And now, as you can see, as of this recording, it's kind of holding right there in a pretty tight pattern, meaning there's potential for this to break its consolidation towards the upside. But what's likely going to happen is we'll get some profit taking here and a slight pullback before the market turns around and goes to that next target, which is at the 5,000 level. So we're still in that bull market. Now, once we get to that 5,000 level, we'll probably slip into a trading range or a pullback for a few months after that. But again, who knows? You just got to play price, because anything could happen when there's so much free money sloshing around. Our McClellan oscillator jumped to its highest level since the November 20 bull thrust that marked the end of the volatile multi-month sideways range. So this is bullish. This indicator is a breadth indicator. And you remember about breadth, we want a bunch of stocks moving together higher because that means it's a stronger market versus just a few big ones holding the whole thing up. And you can see back here, remember that big sideways pattern that we had in 2020? Well, when this indicator bursted up like this, we finally broke out. The same thing is happening right now. So again, this is a bullish sign. And as I said, there's a lot of money sloshing around, right? And you can see it right here in this chart. The aggregate US index fund flows has been insane over the last few months. Look at this spike. This is just more and more money coming in. And when it comes in, what are they going to do? They're going to buy stocks, right? So it just pushes the indices higher. Now, typically you see this type of mass inflows at major bottoms or in the lead up to larger tops. And obviously we're in the latter camp because, we haven't had a big bottom or a big bear market. And these inflows have almost entirely come from the retail crowd over the last 2 years. So here's a chart from Bloomberg. The white line is the retail crowd versus everybody else. And you can see that's where most of the money is coming from. Bank of America's December fund manager survey had a few interesting data points. First one is that cash holdings surged to 5.1%. This is a survey, right? So fund managers are saying how much cash they're holding. So the fact that it's over 5% triggers a contrarian buy signal, meaning there's a lot of cash on the sidelines that looks like it wants to come in. But just 13% of respondents said they're underweight stocks, and only 9% expect bond yields to move lower. So it's a bit interesting. But of course, this market has been weird for a long time. So let's see. LPL Research put out a good charts of the year post, and one of the highlights from that is when they said that 2021 was one of the best years for stocks on record. There's a 27 market return and only 5% pullback all year. But if you look at any of the active funds, most of them struggled. And that's because this is one of those years where if you were just long and you were passive, you did great. So there's only 5% pullback all year. Normally there's an average of 3. Now we should certainly see more volatility this year because we're past the peak liquidity and moving into a global tightening regime. So the easy money, we've reached the top of that. We're not going to get more and more easy money from here. Plus we got some negative seasonality headwinds coming up. This chart is from Jesse Stein, kind of showing how the S&P performs during different presidential cycles, and the odds are not in our favor over the next few quarters. You can see here that silver held its line on its monthly chart right here, meaning it did not break down. So there's this big consolidation happening, and you can see that little wick is actually positive. Same you can see in the silver miners, which is one way to play silver. They rebounded off their monthly Bollinger Band and put in a large lower wick, which means that the bulls came in and bought everything up when it was about to fall. So the bulls overpowered the bears in December. Bullish sign. So you might want to keep your eye on precious metals like silver because they could be setting up for a very good year after a mostly sideways 2021. Palantir Technology closed near its monthly lows after breaking down from its year-long sideways range. Not good. Now its target is $10. So if you're looking to short something, that might be it. And that would be a full round trip to its IPO price. And Alex, our lead researcher at MacroOps, he actually used to work at Palantir. They do some crazy stuff over there. Home builder Beazer Homes is one that you might want to add to your watch list. It's ticker symbol BZH. It's making an attempt to break out from its decade-long basing pattern. It's beat a lot of earnings recently, and it's only trading for 4.8 times EV over EBITDA. And it's growing both top and bottom lines, so revenue and profit. So it's looking good. Definitely one to add to your watch list. Another company that we're digging into is Zim Integrated Shipping Services, ticker symbol ZIM. So this is a container shipping company based out of Israel. Now we're still looking into it, but it looks very cheap and it has very strong growth. And the chart is in a clear uptrend. So this is definitely one to watch too if you're into international stocks. So that's it for this week. And if you haven't already, make sure you go over to MacroOps and get on our mailing list. It's free. I'll see you next week.